Hello and welcome to the Optimisation Desk Market Update. I'm Ropa Manyanhaire.
And I'm Hilll.
Today we'll be sharing our views on what we expect for 2020. So last year, LNG was the main bearish driver that we saw, and we expect the same theme again to happen this year in 2020. With weak Asian demand and also the rise in US LNG export, this made Europe became the new dumping ground for LNG cargoes. So we've had a really mild winter so far. Do you still think that there's a significant risk of cold weather in Q1 20?
Yeah, there's always cold weather risk, I think, at this sort of time of the year. I think there is some cold weather risk going towards the end of January into February. But I do think if we do have any significant cold weather, we've got plenty of gas and storage. I think our MRS sites are about 80% full at the moment. So that should alleviate any sort of cold weather risk. LNG-wise as well, as you mentioned, we've got plenty of tankers kicking about. So I think there's 9 tankers at the time sort of when we were discussing this that are coming towards the UK before the end of this month. So again, that should go some way to alleviate that cold weather risk.
So the Nord Stream 2 pipeline has now been pushed back again. It was meant to be completed by the end of 2019. However, it now looks like it will actually be completed in Q1 21 at the moment. How will this delay impact prices this year?
I think the delay has probably already been priced in, to be honest. I think as we got towards the end of last year, the potential deal being reached was a bearish signal, but the fact that this has now been pushed back, we probably would have already seen some bullish moves. I think any further delays to the pipeline extension are going to be bullish for the market. Yeah.
Tensions rose between US and Iran after Iran's most powerful commander, General Qasem Soleimani, was killed following a US airstrike that was ordered by Donald Trump, unfortunately on Friday the 3rd of January. How did the oil market react to this?
We did see some bullish moves. I think oil got to above $70 per barrel. Nothing huge though, because I think overall there still is a huge supply glut. OPEC, Russia, America have been continuing to output at quite high levels, especially in the US. And that's really been keeping prices quite low. So we didn't see any huge reactions. Obviously, it's one to watch for 2020. Any sort of further geopolitical tensions, we could see some more upside there.
Carbon prices was one of the main bullish drivers behind any upside in gas and power prices last year, and this was mainly due to the uncertainty brought on by Brexit negotiations. Now that the Conservative Party have won majority, it seems that we're more likely to now achieve a deal. What can we expect to happen in the carbon market once a deal is agreed?
I think, previously the UK signing a deal with the EU would have meant that we'd continue to participate in the EU ETS. This could potentially be a bullish drive for prices. However, with all the uncertainty around Brexit, the market itself has been delayed through 2019. So you've now got sort of backlog of certificates, of free certificates. So potentially you could see those dumped on the market this year, which would be a big bearish driver for things, of course. And also, if no deal is signed, then those certificates themselves are going to have to be sold back into the market. And again, that could be a bearish drive for prices. So definitely one to watch for this year.
$1 million question for you, Sam. Are you bullish or bearish this year?
I think following what we saw happen to prices in 2019, where prices have been coming off all year, I think it wouldn't be irrational to think that we could potentially see a bounce in prices. I think there is some upside in US foreign policy, things going on with Brexit, which could affect oil prices and could affect carbon prices. However, generally speaking, I think I am bearish. I think we've got plenty of gas and storage, plenty of LNG tankers coming our way, lots of renewable generation, and temperatures are actually looking quite mild towards the end of this winter. I think there's sort of a 50-60% chance that things will be milder than potentially thought earlier on in the winter period. So yeah, generally bearish. How about you, Ropa?
I'm actually quite neutral. I think we'll see prices trade in a very narrow spread this year. I think LNG will continue to be the main bearish driver. However, I do feel once gas prices sort of reach the floor price and it's no longer competitive enough for producers, we might start to see them start to pull back some of the LNG supply, which again could end up supporting prices.
Yeah,
thank you for today, Sam. That is it from the Optimisation Desk. Thank you for listening. Please, if you'd like to read more, follow us on our social media pages where we will be releasing our more detailed 2020 outlook. Follow myself, Ropa Manyanhaire, and
Sam Hill
on LinkedIn. Thank you.
Thank you. Cheers.